As I said, Jarra is the head of commodity sales, Australia S&P Global Market Intelligence, which is a leading provider of financial, technical and industry data utilised by firms across metals and mining.
Thanks, Christy, and thank you to Paydirt for the opportunity to present at this excellent conference. Today's presentation will provide the audience with an update of global battery material exploration trends, market dynamics and key indicators for the year ahead. S&P Global has recently published our World Exploration Trends Report for 2024, which incorporates interviews with over 3,000 mining and exploration companies. Key findings indicate that macroeconomic headwinds and geopolitical tensions have had a significant impact on global exploration activity globally. While metal prices are elevated compared to pre-pandemic levels, most have fallen considerably since their 2022 highs, with the global aggregate exploration budget falling slightly by 3% year over year from 2022. For 2024, we forecast exploration budgets to remain at current levels. However, should the macroeconomic and financing conditions remain as is, we believe that a modest year-over-year decline, around about 5%, is the most likely scenario. While overall exploration budgets declined in 2023, exploration for battery metals, copper, lithium, nickel, cobalt and zinc continued their upward trend to an all-time high of US $1.6 billion, with a 40% increase from 2022. This is despite significant price pressures in the lithium sector due to weakening demand and oversupply. Declining consumer affordability has triggered some automakers to scale back electric vehicle production plans, which has impacted lithium prices and triggered production to supply discipline from the mining sector. The copper market features short-term supply-demand balance challenges, with copper smelters facing supply shortage of concentrate, which is helping to rally prices in 2024. Prices were also supported by the release of positive economic data in China and the prospect of strong demand growth in the renewable energy sector. The growth of AI usage is also expected to boost power consumption and, ultimately, copper demand. Exploration budgets for lithium increased by 77% in 2023 to an all-time high of $830 million, displacing nickel as the top battery metal in 2023 and making it the third most explored commodity overall. The lithium story is largely shaped by junior explorers allocating funds to greenfield projects, while nickel exploration is heavily influenced by major companies increasing activity at existing mines. Canada and Australia continue to be the top exploration hubs for battery metals, which can be attributed to geology, discoveries driving interest, and the concentration of junior explorers on the TSX, TSXV, ASX, and also incentives to spend raised funds locally. Copper budgets in 2023 increased by 12% to their highest level since 2013. Due to its role in decarbonisation and electrification, copper exploration is expected to be strong in the near term, as evident by an uptick in capital raisings in the second half of 2023. This is despite a tight monetary environment. Copper discoveries are still trending down despite increasing budgets and a long-term higher price, with easier at-surface discoveries not occurring, which continues to create long-term supply concerns. Nickel paints a similar picture, with major discoveries remaining scarce amid potential future supply deficits in the long term. Lithium prices inched up in March, supported by production cuts, auction results, and improved sentiment in traction battery demand. Prices rose 5% and 2% respectively on a lithium carbonate CIF Asia and delivered duty paid basis in Q1 2024. We are seeing many lithium producers returning to auctions to discover a perceived true price. The spodumene price has been rising since February, more sharply than lithium carbonate, but remains deep in the cost curve despite extensive production cuts. Many lithium producers echoed in their fourth quarter 2023 earnings calls that it is challenging to accurately forecast the price they receive for their lithium products. In February, passenger plug-in electric vehicle sales across top markets dropped by 30.8% month over month, primarily impacted by a 42% decline in China. As subsidies reduce, PEV sales momentum will be dictated by consumer income, vehicle price, model choice, and performance. Less stringent emission reduction requirements will slow the uptake of battery electric vehicles compared to plug-in hybrids, which use smaller batteries and require less metal. Looking forward, PEV sales are forecast to grow at 23%. This, combined with production discipline, it appears the only direction for lithium prices is up, with price recovery forecasted. Prices in April could be supported further if the publication of stronger March PEV sales and battery production data justifies the demand optimism. Looking at the M&A space, battery material acquisition demand remains strong, with the following significant corporate and project-level transactions closing since January 2023. Weak battery material commodity prices also present attractive M&A opportunities to the market, with asset valuations adjusting significantly. These tables display the average M&A price paid metrics for lithium and copper, comparing the bull market of 2022 versus 2023. As you can see, significant M&A value is now being presented to the sector. In summary, global battery material exploration remains very strong despite a range of macroeconomic challenges. Depressed commodity prices present significant M&A value to companies with the mid to long-term view. A gap in significant discoveries across key battery material commodities is likely to impact future supply and presents opportunities to companies that are able to generate exploration success. Thank you.